The following program is brought to you by Unisys, the power of two.
Good afternoon, everybody. We welcome you to our Monday edition of Market Wrap, an historic day, obviously, as we've been telling you all day today. If you have been away from your television set and haven't heard about the stock market, this was it. We have exceeded the percentage drops that we saw in 1929. Point-wise, this, of course, is a record as well. Volume-wise, records across the board, as we saw the tremendous selling that we experienced last week hit the trading floor once again today. And how? In fact, we show you the chart of the Dow Jones Industrial Average for today. They've had to redraw the chart, and there it is, redrawn with new limits on the Dow. And you can see that near the close there, we had a gap down on the close, tremendous amount of selling on the Dow Jones Industrial Average as we finished down about 450 points. I don't have an exact reading in front of me right now, but as you'll be able to follow on the lower ticker there, it is a record drop. All right. Let's try and put this in perspective. We're going to go live to the floor of the American Stock Exchange and talk with Paul Tudor Jones of Tudor Investment. We'll also get an update from the action in Chicago. FNN's Ron Insana is standing by there with a guest, floor trader. And then our own John Bollinger will be here to wrap up the program with his own analysis of today's market activity. Though first, let's go to the American Exchange live, where the tremendous amount of selling there as well today, where we have futures trader Paul Tudor Jones, the president of Tudor Investment. Paul, can you hear me okay?
I can hear you, Bill.
Okay.
I'm not sure I want to, but I can.
Yeah, I can imagine, buddy. All right, tell me, give it to me straight, Doc. What, in your view, is going on?
I think that we've got a market that has been seriously overvalued for some time. I think that what we've witnessed the past couple of days has obviously been the piercing of this bubble. And I think that what you saw today and what you may see tomorrow morning will be the culmination of this selling climax for now, and I emphasize for now.
Now, you had told me a few weeks ago that you were looking for a drop. Did you expect it to be this precipitous, this quick?
No. We thought the market would be under pressure through October. We thought it'd go to the low 2200s, but we thought you'd see this kind of a break sometime early next year, but quite apparently the market's doing exactly what it always does, and that's fooling 99.9% of the people. And that's why it's happening now. I would say Wall Street uniformly was unprepared for this magnitude of a drop. And, of course, that's why you got it, because that is the nature of a market.
Yeah. Now, you know, people had been looking for a drop when the bear market set in, perhaps after we had hit 3,600 on the Dow. Is this the kind of a drop where we're going to wash that out, have a bear market that could last a few weeks and then it's over with and we resume the uptrend? What are you thinking?
I think that you are in the beginning of a primary bear market that's going to last for, unfortunately, a long time to come. The action today, if you were a stock trader, and particularly if you were a stock trader trading simply on a technical basis, you would have made two trades in the 80s. You would have bought the market in August of 82 when you had record up volume and you had a record up day on a nominal basis, and you would have sold the market beginning on Friday when you had range expansion, a record nominal down day, and also record volume. Today is simply a confirmation of what began on Friday. The only thing that I can take heart in is I think that you did unquestionably today finish this wave of the selling climax. I think you've got two things to look forward to in the next 24 hours. One good and one not so good. The one bad thing is that this afternoon, Proctor on his hotline will unequivocally come out, not unequivocally, but I would say the odds are over 95% that he'll come out and say that the bull market is over and then we're now beginning a major league bear market. But I think a lot of people, particularly professionals, recognize that fact, and that was certainly discounted to a great extent today. The second thing that we have to look forward to in the next governmental and administrative intervention in foreign exchange markets. We should see them in the debt markets. We should certainly see some type of constructive action to stem what has unquestionably been a panic. And I think that you'll see the market on the cash side start out weaker in the morning, but I would, my gut instinct tells me that you'll finish up on the day tomorrow. I think the prudent thing for investors to do at this point is unquestionably not to buy, is to look for some type of a rally.
With this market, Paul, are you just out of this, or are you trying to trade this at all? I mean, I know you're the maniacal trader anyway, huh? Sitting in front of the Quotron machine all day. Are you trying to play this down move at all?
We've traded it heavily for the past 2 weeks, and that's the only comment that I'll make.
Now, as far as the rest of the futures markets, is there any kind of a play there? I mean, gold went higher today. Oil kind of went higher at one point, but are you looking at those as trades right now?
I think that what you've got going on, for instance, if you notice today, you had the CRB index down, yet gold and silver were through the roof. You know, one of my favorite trades right now is unfortunately being long fear, which means being long the metals complex and short the rest of the hard commodity complex. Because I think what you're going to see over the course of the next weeks is you're going to see, and of course what you saw today was the fear of a liquidity crunch and the fear of disinflation and not deflation, disinflation and deflation.
Yes.
Gold and silver were not up today because of inflationary fears by any stretch of the imagination. They were up because of the fear factor.
30 seconds. Are you afraid for the economy at this point? I'm not trying to, you know, make this reactionary at this time, but is that something that we might consider as well?
I think that everyone, every American at this stage of the game needs to get their house in order, needs to be prudent and be conservative in their investments, needs to cut back on whatever speculative investments they have. I think the next few years will be a period of capital preservation, and that's where the emphasis needs to be.
All right. Thank you, Paul Tudor Jones, very much.
You're welcome.
Paul Tudor Jones of the Tudor Investment Corporation, standing by there live at the floor of the the American Stock Exchange. The New York Stock Exchange tape was delayed 2 hours, 10 minutes at the closing bell. The transactions you see going by there are that late. However, I will point out that the lower ticker that shows you the real-time FNN summary quotes are actually up to date at this time. We will continue. We're going to go to Chicago when we come back and find out what's going on there as well. Stay with us.